Hearing the Senate Banking, Housing, Urban Affairs Committee will come to order. This hearing is in the virtual format. A few reminders as we begin. Once you start speaking, there'll be a slight delay before you're displayed on the screen. To minimize background noise, please click the mute button until it's your turn to speak or ask questions. You should all have one box on your screens labeled clock. For witnesses, you'll have 5 minutes for your opening statements. For all senators, the 5-minute clock still applies for questions. At 30 seconds remaining for your statements and questions, you'll hear a bell ring to remind you your time's almost expired. It rings again 30 seconds later. If there's a tech issue, we'll move to the next witness or senator until it is resolved. To simplify the speaking process, Senator Toomey and I have agreed to go by seniority for this hearing. This hearing is the beginning of our efforts, bipartisan efforts to enact a long-term reauthorization of the National Flood Insurance Program. At a later hearing, we'll invite the Federal Emergency Management Agency to discuss the status and reauthorization of the program. Flooding is the most common, most costly natural disaster facing families, businesses, and communities across our country. It can take families' homes and memories, wreck their finances, shutter a small business, destroy infrastructure, even entire communities. Disasters often fall hardest on low-income families and communities who have fewer resources to prepare for and respond to them. We can only expect flooding to get worse and become even more common as the climate continues to change. People in Ohio and in North Dakota, Maryland, Louisiana, all over the country are already seeing more flooding. They're feeling the consequences, whether from spring snowmelt or increasingly powerful storms or sunny day flooding in coastal communities or extreme rainfall that overwhelms aging infrastructure and the land's capacity to absorb water. Just today, we're seeing flash flooding in Louisiana and Texas. No matter where you live, everyone pays for the financial fallout as the country spends tax dollars to help families and communities recover. We know we must take action to protect communities from climate change and seize the opportunities that come with that effort. That's going to be a long-term effort. While we seek to halt the trajectory of our changing climate, we also need to help families and communities become more resilient to the flooding we face now in the coming decades, and whenever possible, avoid it altogether. The NFIP is critical to that effort. The program, as we know, provides $1.3 trillion in coverage to more than 5 million homes and businesses in some 22,000 communities. It's not just an insurance program. Its job isn't just to help with recovery, but to prevent and minimize the damage in the first place. The NFIP combats the overall threat of flooding through 4 interrelated components: flood insurance to help property owners and renters recover quickly after a flood and reduce the need for federal emergency spending; floodplain management to minimize damage to people and property, make our communities more resilient through the adoption of local ordinances and building codes; 3, floodplain mapping to identify and communicate that risk to first responders, homeowners, and communities so they can mitigate or avoid hazards altogether; and 4, mitigation to help remove property from harm's way through property level and community investments that reduce our overall level of flood risk and will save money. Through NFIP reauthorization, we have an opportunity to make our families and businesses communities safer and more resilient. Today, our witnesses will provide their perspectives on what this committee should consider as we work on that effort. I'm interested from all of you as witnesses in your recommendations for ways we can strengthen the NFIP so it can provide reliable access to insurance for property owners and renters, so it can address affordability concerns, so it can ensure that more people are aware of their flood risk and insured against losses. All of that we help the nation predict and reduce our overall level of flood risk through investments and improvements in mapping, management, floodplain management, mitigation. In 2017, then Chairman Crapo and I began working with members of this committee on a long-term reauthorization. This Congress, I look forward to continuing this work with Ranking Member Toomey and the members of the committee to strengthen NFIP and the country's comprehensive approach to mitigating flood risk through a long-term reauthorization bill. That is our goal, and I'm hopeful we can do it. Chairman, Ranking Member Toomey.
Thank you, Mr. Chairman, and greetings to all of our witnesses today. As we know, the last long-term reauthorization of the National Flood Insurance Program occurred in 2012. That 5-year authorization expired, of course, in 2017, and since then, we've had 16 short-term NFIP reauthorizations. I'm hoping that we can find the common ground necessary to avoid a 17th short-term reauthorization. However, I would remind my colleagues our deadline of September 30th is closer than it may seem. I'm ready to work quickly and cooperatively to find a path forward. But before we discuss what ought to be in the NFIP reauthorization, I do want to remind everyone of the scope of NFIP's challenges. Put simply, NFIP is broken. Since 2005, the year Hurricane Katrina devastated the Gulf Coast, NFIP has had to borrow nearly $40 billion from the Treasury in order to pay claims. And that wasn't just Hurricane Katrina. In other words, NFIP has lost about $2.25 billion per year on average over the last 16 years. Now consider that $2.25 billion per year loss, consider it in the context of NFIP's total annual revenue last year of about $4.6 billion. For the last decade and a half, NFIP has averaged an annual loss representing about half its total annual revenue. Now, in the real world, a private insurer that had this magnitude of losses year after year would certainly cease to exist. And that brings me to an important point. The NFIP really shouldn't be considered an insurance program at all. In many ways, it's really a subsidization program. Specifically, NFIP subsidizes the cost of living and building in flood-prone areas. Usually, we subsidize activities because we want to encourage them. Conversely, in the case of NFIP, subsidies lead to more building and rebuilding in areas at extreme risk of flooding. Exacerbating the problem, development itself within these flood-prone areas tends to further increase flood risk and flood damage because it covers the absorbent green space with impermeable surfaces. And to whom do these subsidies mostly accrue? Wealthy people. Properties with subsidized NFIP premiums are overwhelmingly located in our wealthiest communities. Likewise, subsidized NFIP premiums are rare in our lower income communities. Lately, this committee spent a great deal of time discussing climate risk and equity. I can't think of a better opportunity to demonstrate a commitment to addressing both than through a proper reauthorization of the NFIP. Now, part of the good news is that the NFIP is on a slow but positive path toward actuarially more sound premiums. And that brings me to the key principle of reauthorization, which is let's do no harm. Reauthorization must not interrupt this important positive progress. Next, we should continue to explore opportunities to bring more private capital into the flood insurance business. NFIP should continue to pursue opportunities to lay off risk to the private sector through reinsurance and other creative capital market structures. To the extent that NFIP needs additional authority to do so, we should provide that authority. Additionally, we should encourage private flood insurance as an alternative. Increasing the availability of private flood insurance is a great way to get more homeowners insured against flood damage. That's a worthwhile goal that is good for the homeowner and the taxpayer. Further, if the private sector can offer better coverage, better service, and do it at a better price, why would we want to stand in the way of that service for our constituents? Additionally, to the extent that subsidies continue to exist within NFIP, we should at least explore opportunities to target those more to the people who need them the most. But I would remind my colleagues of the incentives, the perverse incentives involved in flood insurance subsidies, and urge great caution. Finally, I hope we take this opportunity to find a better way to explain flood risk to policyholders and, perhaps more importantly, future homebuyers. Those who choose to live in flood-prone areas, they should do so with eyes wide open. Flood insurance is important, and it provides considerable financial security, but flood insurance is not the National Guard or the Coast Guard. It can't rescue people stranded by rising floodwaters, and flood insurance is not a time machine. It can't give back the days, weeks, months, and in some cases years it takes to rebuild and recover from a major flood. So, Mr. Chairman, in conclusion, I think a long-term reauthorization must continue to move NFIP in a positive direction, and I stand ready to work with you and my other colleagues to achieve that goal. Thank you.
Thank you, Senator Toomey. I'll introduce today's witnesses. Mr. Chad Burgenis is the Executive Director of the Association of State Floodplain Managers. He previously served in several planning and community support roles in my state, including serving as Ohio's State Hazard Mitigation Officer. He's previously testified before this committee on the topic of NFIP. He lugs around an Ohio State mug while inexplicably having moved to Wisconsin. Ms. Velma Smith is the Senior Government Relations Officer at Pew Charitable Trust, where she's worked in reforming flood insurance and promoting flood resilient and environmentally sound coastal policies. She previously served as a senior advisor with the National Environmental Trust and executive director of Friends of the Earth. Rebecca Kagan Sternhell is director of the New York City Office of Federal Affairs, where she's worked on flood insurance issues for almost a decade. She previously served as Deputy Assistant Administrator at the U.S. Small Business Administration and as Assistant Corporate Counsel in the Division of Legal Counsel in the Mayor's Office of Federal Affairs for New York City's Law Department in Washington. Mr. Stephen Ellis is the President of Taxpayers for Common Sense. He joined Taxpayers for Common Sense in 1999, where his roles have included serving as media and legislative spokesperson. Mr. Ellis has also previously testified before this committee on flood insurance. Mr. R.J. Lehman is Senior Fellow and Editor-in-Chief at the International Center for Law and Economics. He founded the R Street Institute, where he served as Director of Finance, Insurance, and Trade Policy. He also served as Deputy Director of the Heartland Institute Center on Finance, Insurance, and Real Estate. Mr. Bergson, if you would begin. Mr. Burgenis.
Thank you. Good morning, Chairman Brown, Ranking Member Toomey, and members of the committee. I am Chad Burgenis, Executive Director of the Association of State Floodplain Managers, and I'm honored to be testifying on a program that our organization and members consider essential to the nation's flood loss reduction effort, the National Flood Insurance Program. Our members are involved in implementing most elements of the NFIP, and ASFPM's provided input on every NFIP reform effort since the 1980s. Our written statement identifies over 20 reform ideas for your consideration. Today, the NFIP is on the cusp of a significant transformation. The premise is simple. Use an accurate risk-based rate to communicate to homeowners, business owners, and renters their true flood risk. That's what Risk Rating 2.0 does. Despite having some implementation questions and concerns, especially regarding how the new system will tie into floodplain management and mitigation elements of the NFIP, we are nonetheless supportive of Risk Rating 2.0. If we were to identify one of the most significant financial risks to the NFIP, though, we must examine how debt is dealt with. We've seen you give Fema authority to use private sector financial risk management tools such as reinsurance and catastrophe bonds. You've put policies on the path to full risk rates, and with Risk Rating 2.0, FEMA will be using current insurance rating approaches. Yet the NFIP's debt seems to be treated by Congress differently than programs like crop insurance, where the annual taxpayer cost is near $10 billion. It is time to recognize the progress that FEMA's made with managing the financial risk of the program, recognizing that the NFIP was never designed to handle today's catastrophic flood events, and recognize the broader societal benefits of the NFIP by forgiving the debt and establishing a threshold like a sufficiency standard above which debt is treated like disaster assistance and appropriated through disaster supplementals. The foundation on which the entire program is built is comprehensive and complete flood mapping. Arguably, the most significant reform in 2012 was the establishment of the National Flood Mapping Program. It mandated an ambitious national flood mapping effort that comprehensively identified the types of different flood risks facing our citizens. Sadly, we have to report that since that time, beyond ensuring that the maps were largely updated, we barely made progress on expanding the mapping to ensure we've identified flood hazard areas before development, not afterwards. In candidly refreshing testimony in early 2020 before the House Science Committee, FEMA not only recognized this shortfall, but also indicated that appropriations are not nearly where they need to be. ASFPM is calling for an increased authorization for flood mapping and also asking you to consider a $7.5 billion flood mapping surge as part of any infrastructure bill that the Senate might consider. Floodplain management's role in the NFIP is only successful if we enable communities and states to have the capacity to do it. It focuses on adopting and enforcing codes and standards that govern land use and construction in flood hazard areas. Because state and local capability is key to effective floodplain management, ASFPM is calling for the authorization of the Community Assistance Program, doubling its budget from $10 million to $20 million annually. The flood mitigation element of the NFIP is realized primarily through increased cost of compliance coverage as part of every NFIP policy and the Flood Mitigation Assistance Program, which focuses on mitigating existing at-risk buildings. ASFPM is calling for a much stronger investment in both ICC and FMA, including tripling the amount of ICC funds available through a flood insurance policy. ASFPM also recognizes and supports adding new mitigation tools to the toolbox, including loan programs and more focused flood mitigation planning. Finally, we've already commented on Risk Rating 2.0, and we also note that the flood insurance element of the maintaining availability of NFIP policies is critical, even with a growing private sector market, as private policies will inevitably get dropped after claims or due to geographic concentration of risk. ASFPM continues to believe that there are some reforms necessary to ensure that the NFIP is on a fair playing field with private flood before mechanisms like continuous coverage are considered. In closing, we'd also like to comment on how the NFIP can address equity and social justice. One of the strong arguments for Risk Rating 2.0 is that preliminary data from Fema suggested it will make rates more equitable and just. We also recognize that the NFIP will need a targeted, means-tested affordability program. Mitigation efforts through FMA could be made more just by evaluating how other policies like relocation assistance and benefit cost analysis can be changed to recognize equity and social dimensions of flooding. By building the NFIP of tomorrow, we should ensure that all of our communities and property owners have the opportunity to make their families, their homes, and businesses more resilient to the nation's most significant natural hazard, flooding. Thank you.
Thank you, Mr. Burgenis. Ms. Smith is recognized.
Thank you. Good morning, Chairman Brown, Ranking Member Toomey, members of the committee. On behalf of the Pew Charitable Trust, I thank you for the opportunity to testify. Let me start with this. The NFIP is essential to the nation's management of flood risk. While the program needs to be adjusted and reformed, we know that you must carefully consider the impacts of any changes to a program that serves so many flood-weary communities. In our written testimony, we cover a range of topics, from the pressing need for more mapping, particularly in rural areas, to the shortfalls in mitigation. Let me run through a few of the suggestions. We urge you to craft a requirement for flood disclosure, and we're grateful to committee members who have endorsed such proposals. Upfront disclosures about flood risk made before financial commitments in mortgages or leases can help consumers make flood-smart decisions. We wholeheartedly endorse the proposal by Senators Reid, Kennedy, and Menendez to establish a flood-specific revolving loan fund. Floods rank, as you have noted, as the most frequent and costly natural disaster. So we believe it makes good sense to create and generously seed a program to help states, territories, and tribes with flood mitigation. A revolving loan fund would address the feast and famine problem that can attach to grant awards and allow states to build up their own staffing and preparedness capability. We also thank Senators Scotts and Schatz for focusing on the long-standing but still growing problem of repetitive loss properties. These are the properties that in some years account for as little as 1% of policies, but tap the fund for as much as 30% of claims. Pew believes we must make the neighborhoods that contain these properties top priorities for mitigation. And of course, we know you must look at rates and affordability. We support efforts to make premiums more affordable for those least able to maintain coverage. We believe you must do so with a carefully targeted program, one that is truly equitable and will not threaten the program's ability to pay claims. We caution against across-the-board rate caps, which will only perpetuate some of the program's current inequities. We understand the apprehension around Risk Rating 2.0, but urge you not to stand in the way of this important and carefully considered update. We also believe that rate assistance must be accompanied by mitigation assistance. For those who live in high-risk areas, particularly areas where high risk overlaps with high social vulnerability, a simple rate subsidy does not solve the real problem. As storms grow fiercer and rainfall increases, threats to life and property will grow despite the lower cost of insurance. The nation's resilience gap must be met with substantial new mitigation investment and safer building practices. Finally, we ask you to examine how the NFIP might be changed to foster better, more informed decisions about future flood risk, perhaps prompting changes to the program's floodplain management regulations and mapping efforts. For 50 years, this program has been based on the notion that flooding can be managed by looking backwards and on the assumption that tomorrow's floods will mirror those of the past. Surely the last decade or even the last half decade has shown us that that is wrong. In closing, let me say that Pew looks forward to working with the committee to support an NFIP that will keep flood insurance available to those who need it without asking taxpayers to subsidize risky development, that will foster fixes or buyouts of problem properties and provide assistance to vulnerable communities, that will promote careful consideration of future risk and conservation of the natural resources that can help in flood management, and ultimately make the nation better prepared for tomorrow's severe storms. I look forward to working with the committee, and I look forward to your questions. Thank you.
Thank you. Ms. Kagan Sternhell is recognized for 5 minutes. Thank you.
Thank you. Good morning, Chair Brown, Ranking Member Toomey, and other members of the committee. On behalf of the Mayor and the 8.6 million New York City residents, I thank you for having me here today to discuss the National Flood Insurance Program and its role in our communities. The advent of sea level rise and rapid climate change is forcing us to reckon with our relationship to the water and the cities and the communities we've developed next to it. Like so many other states and communities throughout this country, New York City's riverbanks and coasts hold a dangerous beauty we must begin to grapple with. Hurricane Sandy laid this fact bare in New York City and communities up and down the eastern seaboard, as did Hurricane Irma along the Gulf Coast, and the 2019 Missouri River floods in the Dakotas, Missouri, Iowa, Illinois, Nebraska, and many more. The NFIP is a lifeline for property owners after a flooding event that can mean the difference between recovery and the loss of a critical core asset. In my written statement, I cover a range of reauthorization issues and concerns from the perspective of local governments. Today, I want to focus on how we can solve two critical questions. First, how do we make sure flood insurance is affordable to all Americans who need it? And second, what steps should we take to mitigate against catastrophic harm stemming from floods? Flood insurance affordability is already a problem for households across the country as premiums continue to increase year over year. The challenge of affordability will only continue to grow as climate change increases the intensity and frequency of flooding. The COVID-19 pandemic has added an additional layer of complexity to the affordability issue as millions of Americans have lost jobs, saw their incomes reduced, and struggled to pay mortgages and rents. Though we're at the long-awaited moment of this pandemic seemingly coming under control and the country opening back up, millions of Americans will now face staggering rent and mortgage arrears on top of existing mandatory expenses like insurance. Further complicating matters is a policy Fema has recently undertaken to reform how rates are calculated, ostensibly to better reflect risk based on a series of public and proprietary tools. Risk Rating 2.0, as it is designed, is expected to cause flood insurance costs to increase in many areas in the country, including New York City's coastal neighborhoods. Many of these neighborhoods are among our last bastions of affordable homeownership, especially for communities that continue to experience the damaging legacies of racist redlining policies. Rapidly rising premiums will force thousands to make the impossible choice between abandoning insurance policies or cutting back on household expenses like necessities like food, utility payments, and school supplies, or even abandoning their homes altogether. This could lead to and trigger a government-made foreclosure crisis in communities that are already struggling to make ends meet, especially after the COVID-19 pandemic. Because of all this, the city urges Congress to carefully consider what the future rate structure for the NFIP should be upon reauthorization and what it means for affordability going forward. Congress needs to ensure flood insurance remains affordable for the most vulnerable by establishing a means-tested financial assistance for households that need it most. Congress can look at metrics like the Rand-developed pity ratio that looks at the cost of owning a home relative to income to help model the program. Rather than blunter metrics like AMI or home value alone, the city believes this type of metric offers an opportunity to set national policy that is sufficiently sensitive to local and individualized conditions, much in the way Risk Rating 2.0 is attempting to be more individualized. Of course, we cannot solve the affordability problem without also addressing mitigation measures, which serve to buy down risk for the property owner and the program. Currently, the NFIP provides few incentives for property owners to protect their buildings from flood damage and reduce their premiums, other than by elevating their buildings. Past efforts at pushing FEMA to identify mitigation alternatives to elevation have yielded limited results. The city believes more needs to be done and supports provisions on alternative mitigation strategies, especially for dense urban areas. And community-level mitigation is also a critical part of lowering program costs and achieving greater affordability at scale. Federal mitigation programs like BRIC should be maximally funded, whether through a large-scale infrastructure plan or simply through annual appropriations, to increase the resiliency of American communities against the impacts of climate change. Funding should be allocated for coastal and riverine flooding prevention infrastructure and for interior drainage system upgrades. And federal support of resilient design must go hand in hand with these investments. Federal and local policies that anticipate future risks in new construction and infrastructure should become the national norm. For example, in New York City, we have climate resiliency design guidelines that provide an even higher standard of flood protection for city capital projects. We use sea level rise predictions and maps of future flood risks to calculate building-specific resilient design criteria, in addition to abiding by building codes. The city urges you to act decisively to safeguard our economy and our communities by ensuring that Americans can affordably protect their homes and businesses from the risks of disastrous floods now and in the future. I thank you again for having me here today, and I look forward to your questions.
Thank you. Mr. Ellis, you're recognized for 5 minutes. Thank you.
Thank you. Good morning, Chairman Brown, Ranking Member Toomey, members of the Banking Committee. I am Steve Ellis, President of Taxpayers for Common Sense, a national nonpartisan budget watchdog. Thank you for inviting me to testify at this hearing on reauthorizing the National Flood Insurance Program. TCS has worked on flood and disaster-related issues on behalf of taxpayers for our entire 26 years of existence, and I've been involved in flood issues dating back to my days as a young Coast Guard officer dealing with the aftermath of the Great Midwest Flood of 1993. These are critical issues for taxpayers, and the country needs smart public policy that protects people and property. It's worth noting that the first named storm of the 2020 Atlantic hurricane season appeared on May 16th and continued with 30 named storms, a record. This was on the heels of increasing billion-dollar disasters annually. The Congressional Budget Office estimates that hurricane winds and storm-related damages cost the U.S. economy $54 billion annually, including $34 billion in annual economic losses to the residential sector. The expected annual cost to taxpayers is estimated to be $17 billion. For 50 years, the flood insurance program has helped fuel a development boom in medium and high-risk areas simply by making it more affordable to take on flood risk. And housing doesn't occur in a vacuum. As areas develop, infrastructure follows, with roads, bridges, water, electric, and sewer. These all intensify along with residential development. The NFIP has exacerbated exposure to climate change. At the same time, it is negatively impacted by it. As storms increase in frequency, as sea levels rise, this increases the cost to the program. It also increases the demand for disaster spending. Before Hurricane Katrina in 2005, the federal flood insurance program never borrowed more than $1.5 billion from the U.S. Treasury. Since the 2005 storms, the program has borrowed nearly $40 billion. NFIP has subsidized rates in the program virtually since its inception, regardless of need. FEMA estimates that more than 25% of the properties in the program pay subsidized or grandfathered rates, where the flood zone designation is changed. Even with the properties that are paying supposedly risk-based premiums, the fact that the program can borrow from the Treasury is a built-in subsidy. The Government Accountability Office has documented large cross-subsidies, many of which benefit high-income homeowners. They found that over 78% of subsidized properties in the NFIP are located in counties with the highest home values, while only 5% of subsidized properties are in the counties with the lowest home values. This represents a real challenge to the program's sustainability. To help address this, grandfathering should not be allowed for any new construction in the floodplain. The best way to reduce the rate for property owners and taxpayers is to reduce the risk, not with artificial rate caps that hide the real risk to people, but about finding ways to fund mitigation either at the property or community level. While it varies by situation and peril, we know that every dollar spent on mitigation can save as much as $6 or more in post-disaster response. Disasters also have a disproportionate impact on poor and minority populations. In many cases, these individuals don't have the savings to rely on while they rebuild. They may have lost their transportation to work, and their place of business may be destroyed as well. Because of historically discriminatory policies or a need for lower housing costs, these individuals are often situated in less desirable, more vulnerable, higher risk areas. They may not be able to repay loans made available after disasters and provide sufficient funds of their own to tap federal programs. We have long called for means-tested premium assistance to help more homeowners obtain flood insurance while shifting the program away from property-based subsidies. There are a little more than 5 million NFIP policies, but there are well over 100 million housing units in this country. To put the need for flood insurance into perspective, according to Fema, after 2016's extraordinary heavy rainfall event in Baton Rouge, Louisiana, the average homeowner with flood insurance got $86,500 to rebuild their home. The average person without flood insurance got only $9,100 in individual disaster assistance. This sadly demonstrates that many people who aren't required to buy flood insurance should. And even with protection from levees, flood walls, or dams, there is a residual risk of flooding. FEMA has launched Risk Rating 2.0 to better price actual risk for properties. It's supposed to start with new properties and policies in October and existing policies next year. FEMA worked with a variety of organizations to incorporate more data and flood variables to determine actual risk to properties, and will be updated annually. In theory, this will reduce some of the cross subsidies that have plagued the program. This move to Risk Rating 2.0 coincides with long overdue mapping efforts. It goes without saying there have been enormous technological advancements in mapping and modeling since the program's inception 50 years ago. More advanced technologies such as LiDAR, 3D mapping, and computing power enable much more accurate and predictive maps than we've seen today. In conclusion, I want to thank you for inviting me to testify today. NFIP and related disasters are critical issues, not just for their budget and taxpayer impacts, but for society as a whole. The goal must be to develop risk management and mitigation strategies that enable communities, infrastructure, and industries to become more resilient, face less risk, and can better adapt and mitigate future costs and damages of climate change. Thank you very much.
Thank you. Mr. Lehman is recognized for 5 minutes.
Thank you, Chairman Brown, Ranking Member Toomey, and members of the committee. I'm R.J. Lehman, and I am the Senior Fellow and Editor-in-Chief with the International Center for Law and Economics. I'm speaking to you from St. Petersburg, Florida. And Florida is a strong case study in how the NFIP has transformed America. At the beginning of World War II, Florida was the least populated state in the South. It is now the third most populated state in the nation. That's not solely because of the NFIP. Air conditioning also played a part. But the NFIP has been a catalyst in the mass movement of population. It has allowed us to convert wetlands and barrier islands, the natural defenses against things like tropical storms and flooding, into millions of acres of flood-prone housing. In the 40 years after the NFIP was created, there was a 45% increase in the number of Americans living in coastal counties. The problem, of course, is that thanks to climate change, we are projected to see 3 to 6 feet of sea level rise by the end of this century. Given the current population trends, a sea level rise of 3 to 6 feet means that between 4 and 13 million properties will be inundated, not just periodic flooding or chronic flooding, permanently underwater. That's on top of the other flood-related impacts of climate change, like more frequent and more severe tropical storms, more frequent and more severe precipitation events, and it's on top of what human development itself contributes to the problem. When you pave over permeable land, it can't drain. The more properties that are hooked up to antiquated sewage and drainage systems, the greater the odds of catastrophic failure. Models show that what are now considered 100-year storms in the Southeast and the Gulf Coast will, by the end of this century, occur every 1 to 30 years. What are considered 100-year storms in the Northeast and Mid-Atlantic will be expected every year. So when we talk about the NFIP and its debt and the problems with its structure, we need to keep in mind this context that all of this is going to get so much worse. Yet we're not treating it like a crisis. We continue to build more in flood-prone areas than outside of them. According to FEMA and census data from 2000 to 2016, the population of the 100-year floodplain grew by 14%. Faster than the rest of the country combined. A 2019 report looked at construction since 2010 in areas that by the end of the century will be 10-year floodplains. It's an order of magnitude greater than the 100-year floodplain. In 8 coastal states, there was more development in that 10-year floodplain than outside of it. In 4 of them, it was twice as fast. In Connecticut, it was 3 times as fast. So how do we address this? Obviously, the NFIP is only part of the problem and can only be part of the solution. I think it is inevitable in at least some locations that we will have to back from the coast and moving Americans to higher ground. FEMA's buyout programs, some of which are within the scope of the NFIP, are one tool to accomplish that, but it would be very difficult for them to match the scale of the problem. I propose 2 policies, a carrot and a stick, that I think could help nudge us in the right direction. The first is to stop making the problem worse. New construction in 100-year floodplains should not be eligible for NFIP coverage. The guaranteed issue of new policies is where the program most clearly incentivizes building where it's risky. So that's the stick. We have precedent for this sort of approach with the Coastal Barrier Resources System, the USDA's Sod Saver and Swamp Buster programs, And in my state of Florida, the state-run Citizens Insurance no longer insures new construction on the coast. But importantly, making the shift doesn't affect existing NFIP policyholders, which I think is a big plus. But it's not just enough just to tell people where they can't build. You also have to provide somewhere where they can. People need to live somewhere. If we're going to see 13 million flood refugees by the end of this century, then we have to make sure the built environment is able to absorb them. So we struggle today, in large part because of stringent land use policies, even to keep up with the current housing demand. So this can't wait. So my second proposal, the carrot, is provide incentives for states to make it easier to build in areas of low risk. What I have in mind is a version of what's called the disaster deductible. Under the Stafford Act, after a disaster, the federal government picks up 75% of the cost of recovery, states pick up the other 25%. I propose a sliding scale so that if a state decides that property owners in less risky areas can build accessory dwelling units, if they abolish single family zoning in the 500-year floodplain, the least risky, then instead of having the state pick up a 25% Stafford Act cost share, maybe they have a 20% cost share or 15% cost share. What I'm proposing obviously doesn't solve climate change, and I know it is partly outside this committee's jurisdiction, but I think the two policies pair well together. For half a century, the flood insurance program has helped to draw people to risky areas. This would be a nudge to begin to reverse that process, to remove the incentives to build where it's risky and provide incentives to build where it's safe. So with that, I'm available for your questions.
Thank you. And all five of you, thanks for your thoughtful approach. And you all have laid out from different perspectives, but the problem, I think, in a really acute way that Senator Toomey and I know we have work to do to figure out how we can move forward on this. Ms. Smith, let me start with you. Too often after disasters, we hear news stories of families saying they didn't know their homes had been flooded before they bought them or signed a lease. You've called for flood risk disclosure to prospective homeowners or renters, similar to the lead paint disclosures that took a while, but finally government has done in most places. So talk to me about what are the consequences if we don't do that? What will this information, what kind of impact will it have on families and on properties?
Mr. Chairman, I lost audio for a minute. I
Okay.
presume you're asking me that question.
Yeah. What happens with this information? You've called for this information, and what impact it would have?
Yes, I think there are so many instances, and we've heard story after story of folks who moved into a place and really had no notion that they were buying into an area that had previously flooded. The neighbors in that community often knew, but those people didn't realize what was happening. And they turn around and find out that their finances are strained, they can't recover. You know, it's renters. There's many instances of apartment buildings where people rent an apartment and then have to be rescued and lose all their belongings. So we think that if we can add more information, people can make smarter decisions. It's not just about whether they're in a flood zone, but whether the building they're going into has ever flooded before.
Okay, and follow-up question to you and to Mr. Burgenis about mapping and risk identification. Knowing where it might flood is key to being able to mitigate these risks or avoid them altogether. What are your recommendations for improving FEMA's mapping efforts? Every time we do another reauthorization, as Senator Toomey talked about, we talk about mapping, how important mapping is. We authorize it, we never fund mapping as well as we should. How important is it that FEMA provide projections of future flood conditions? Mr. Burgenis, you go first, and then Ms. Smith, if you would.
Well, I suppose on a positive note, back when we were testifying in 2004, we were talking about the quality of existing maps. And one of the things that FEMA has done quite successfully is improve the quality of the existing inventory. But here's the reality. We have 3.5 million miles of stream, rivers, and coastlines in the country. We've mapped about 1.2 million miles of those. The new development that a lot of the panels talked about typically occurs in an area that doesn't have existing development. And the problem is, if we're developing along these creeks and rivers, and coast in areas that we don't know the flood risk, we're already behind. And then the map gets put on them. People get all mad because FEMA's put the floodplain on them, and we're doing this backwards. The most impactful thing is to get the job done mapping the nation and also include what future flood risk is going to be, because then local codes and standards can be adopted to make sure that that house is resilient to flooding 50 or 100 years down the road based on its useful life, as opposed to building to today's flood risk standard.
I absolutely agree with Mr. Burgenis that we have to finish the job in the communities that don't have flood maps or have very old flood maps. Those people have to be given a better idea of what their risk really looks like and where it's headed. If they understand existing flood risk, understand what's driving the risk in their area, whether it's development, whether it's sea level rise, whether it's filling of wetlands, then they can work to manage that risk. But if they don't have a notion, then they'll just be coming back for disaster assistance and insurance subsidies in the future.
Floodplains are wealthy people. We also, which is true, but it's also a place where, I mean, I remember growing up, the places that were flooded in Mansfield, Ohio were mostly African-American, mostly poor people, and it's white Appalachian section of town too. So what do we do to make sure under-resourced, and Ms. Kagan-Sternhell, you can weigh in on this too. What do we do to make sure under-resourced communities and communities of color can access grants that will keep their communities safe? Mr. Burgenis, be brief if you would, and then Ms. Kagan-Sternhell.
Yeah, I think two characteristics we know in communities that are problematic with grants. One is to find cost share. And the second is just have the technical expertise to actually prepare the grants. So two things that I think need to be changed is working with the cost share formula to recognize, I believe, kind of equity and social, even environmental justice kind of factors. And then secondly, we have got to provide better capacity, either building it with the community or providing assistance to actually get grant applications built.
Thank you. And Ms. Kagan-Sternhell, please.
So briefly, I wholeheartedly agree. And especially one of the things we also need to look at is the cost benefit ratio, because often when you have low income neighborhoods, property values are low, sometimes projects don't cost out and therefore they're not eligible for a FEMA program like BRIC. So including those social factors are very, very important. I would say also working to make sure beyond just getting applications or technical expertise, working at the individual homeowner level, and as I testified to a bit earlier, alternative mitigation measures, because sometimes what works like going up doesn't really work in a lot of neighborhoods, certainly where there's densely packed, older cities, maybe construction wasn't as strong as it was previously. You need something other than lifting a home.
Thank you. Senator Toomey is recognized for 5 minutes.
Thank you, Mr. Chairman. My first question is about moral hazard. You know, this is an intrinsic problem with many kinds of insurance products, and flood insurance is no exception. When homeowners and communities are protected from the financial loss of flooding, all else being equal, they have less of an incentive to manage and mitigate that risk. Consider repetitive loss and severe repetitive loss properties. That is, properties that have repeatedly flooded and repeatedly been rebuilt by NFIP money over the years. These properties have had approximately $17 billion in NFIP claims over the years. So when I look at these numbers, I worry that NFIP in its current form is not appropriately managing moral hazard. So Mr. Ellis and Mr. Lehman, would you just briefly address, do you think that historically the NFIP has the right incentive structure to manage moral hazard, or should we do something differently?
Thank you, Senator Toomey. And certainly, I think it's pretty clear that it has not had the right incentive structure to deal with moral hazard. That when in my testimony, I documented how the subsidies disproportionately go to more wealthy communities and don't go to less wealthy counties. When you look at the numbers, when I talked about the only 5% of the subsidies go to the lower value, lower wealthy communities, counties, it was the bottom 5 deciles. So it wasn't like just like the bottom decile. It was actually really disproportionately balanced towards that side. And so we have disincentivized homeowners from mitigating their risks, and many times hidden their risk from them because they don't actually know what their rate would be absent the subsidies. And so we're actually hiding the ball, and we certainly support what Velma was talking about, when Ms. Smith was talking about, in that making sure people know their risk in these areas. And I think that's important risk communication, but certainly the rate structure is as well, and has done a disservice to homeowners, has done a disservice to taxpayers.
Yeah, and I would add, it not only does the subsidies flow from lower to higher risk policyholders, but they flow from inland to the coast, right? So riverine flooding is a serious problem in many communities, but if you eliminated the coastal counties, the NFIP would actually be profitable. That CBO has shown that. So that is specifically how it breaks down. It's lower risk policyholders. Many of them face some flood risk because of riverine flooding. Are subsidizing coastal policyholders, and that's a big part of why the income works the way it does. And I say this as someone who lives in a coastal county, but it is something that is relevant.
So just to follow up on that, so are you saying that across the nation as a whole, on average, the inland plans actually are actuarially sound?
Yeah, more than actuarially sound, they're actually paying. They're being overcharged because they need to subsidize the far below risk cost coastal properties. Which, if we as a country want to make the decision that we want to help people who live in coastal communities, that's a perfectly fine decision for Congress to make. But I would think that taxpayers are the people who should support that, and not lower risk policyholders within the NFIP. That only discourages them from buying the protection that they need because they're getting overcharged.
And maybe it should be an explicit understanding or arrangement rather than implicit and kind of hidden in the premium structure. Let me ask a little bit about risk rating 2.0. So FEMA has been working to update its flood risk rating system. That's what risk rating 2.0 is meant to do, as I understand it. And it's going to rely on more granular data, setting flood insurance premiums presumably more accurately, using geography and flooding frequency and flooding types and building characteristics and other sources of information that presumably get us a more accurate risk rating. So again, for Mr. Ellis and Mr. Lehman, is it your view that risk rating 2.0 is a positive, constructive development for NFIP and its stakeholders?
Absolutely, Senator Toomey. I think that it's more information, it's more data, it's taking away a mapping system, or not taking away a mapping system, but updating a mapping system that is 50 years old, that is essentially going to target it at a property level rather than a broad swath of a neighborhood or a zone.
And it also helps move the discussion to data and science and away from what are local politics in many cases. It is contentious to adopt community flood maps. I'm sure Mr. Burgenis can speak to that, where everyone does not want to be put in the mandatory purchase zone, which is unfortunate because we should want everyone to have flood insurance. If they're low risk, you get charged less, but everyone should have this protection.
Right. Thank you. Thank you, Mr. Chairman.
Thanks, Senator Toomey. Senator Reed from Rhode Island is recognized for 5 minutes.
Mr. Chairman? Mr. Chairman?
We can see you and hear you, Jack.
Okay, then let me begin my questioning. There's a little bit of disruption through the technology. First, Ms. Smith, thank you very much for your testimony, and with respect to the State Flood Mitigation Revolving Loan Fund Act, which I've been pursuing for several years. I think providing low and moderate income individuals with funds to mitigate flood risk would be a positive. Could you just elaborate on the benefits of providing a significant boost? Mr. Chairman, I'm sorry, I can't hear any of the technology.
You're fading in and
I
out.
don't want to.
Senator Reed,
Let me,
if Ms. Smith knows the question, she can do the answer. She seems a bit eager here. So why don't you go ahead, Ms. Smith, and then Jack, you can go back then, all right?
Senator Reid, I apologize. My audio is going in and out. But we are very supportive of the notion of setting up a revolving loan fund to bring some stability to the funding levels. We have heard over and over again from communities that they can't sustain keeping mitigation experts on staff and planning ahead for the mitigation projects that they need because the funding goes up and down, it's feast and famine. So your proposal would stabilize funding, would allow states to put money on the table and help leverage this, and would really be transformational, I think, in terms of promoting new mitigation projects.
Thank you very much. I'll try another question, Mr. Chairman, although my machine is not cooperating. But Mr. Burgenis, can you comment on FEMA's efforts on flood mapping across the country? And also, should these map products include future?
Okay, I
Mr. Burgenis, did you get enough of that question? It's kind of a
well, the detail I did not get. So if you get that.
Mr. Chairman, I think for the order of the community, I should get off and let other people who have better connections ask questions. I'm not usually this inarticulate.
well. Now your question is now you're fine.
Now
Go ahead and ask the
when I
question,
ask
Mr.
question,
Burgenis.
it'll be just chaos. It's chaos. But I'll defer to my colleague and excuse me for the technical difficulties. I'll
All right,
depart.
that's fine.
Thank you, Mr.
Thank you, Senator Reid. Senator Rounds from South Dakota is recognized.
Thank you, Mr. Chairman. Even though I'm in Washington, D.C. right now, I think our bandwidth in South Dakota is better than what Senator Reid had here in D.C. for the last few minutes. Let me just begin by saying that I really do believe that we have to have a good, solid national flood insurance program in place. And I believe that because the real estate market is critical long term. If we want stability in that market, there has to be an alternative. And until such time as I see private insurance being available, and I think that's going to be a real challenge to get, I think we do have to have a strong NFIP program. But I like the idea of the write your own product. And I'd like to begin by talking a little bit about what happened with regard to Hurricane Sandy and what that has done in terms of driving the discussion today. And I'd like to ask Rebecca, just in terms of what happened that caused the problems on Sandy with regard to the consumers that were there, the folks that had purchased policies and so forth. Where were the challenges on Sandy that really drives a lot of the agitation, the irritation, and the disappointment with the NFIP product that was available at that time?
Well, I think first and foremost, the city hadn't had new and still doesn't have new final firms, flood insurance rate maps, since 1983. So when we finally get our final maps coming in 2024, anticipated from FEMA, it'll be 41 years. So, floodwater doesn't abide by what the flood map says to begin with. But then during Sandy, there was far greater inland flooding that had been anticipated than anyone was aware of. So there are many people who should have had coverage that did not. There are many people who did have coverage and then were denied claims based on statements that it was earth movement or what have you. But within the Write Your Own program specifically, there were a number of instances where adjusters came out, filed reports. Those reports were subsequently doctored before they were submitted to FEMA, or adjuster reports were submitted without ever a site visit to the property. So there was a good amount of fraud and a good amount of homeowners being unaware of what was being claimed on their behalf or even getting an accurate reporting of the damage that was sustained, in addition to claims also being denied. So that was sort of the genesis behind the reform push, certainly in the claims movement, the claims sector, and then with the Write Your Owns as well, trying to ensure that there's a higher standard and a higher level of responsibility in the claims process, especially when someone is so vulnerable after sustaining a loss.
And I Appreciate that, because I think this goes to the heart of some of the challenges we have here. And yet I don't understand why this would occur, because as I understand it, the right your owns don't handle the underwriting losses themselves. That goes directly back into the program. So why would someone try to manipulate or to change a claim or to, as you indicated, doctor a report? What was the basis for that happening?
I think we've seen, starting with Katrina and then with Sandy as sort of the next big hurricane flooding event with national attention, it was sort of a swing one direction where the claims during Katrina, people were paid out, large claims, large sums of money. And upon review and after fact and reconciling all of that, it turns out people should not have maybe been reimbursed quite so much. And then the insurers and others were required to recoup those overpayments. And so with Sandy, you saw this pendulum swing the other way, where they were trying to avoid having to deal with that recoupment issue. And so it's now a question about how we can better calibrate to get to a point where people are not being overpaid or overcompensated for their losses, but being compensated appropriately. And at the same time, not being shortchanged what they're due under the various federal programs and policies available to them.
In my prior life, I sold insurance. And one of the challenges, smoke losses is one thing. Water losses is another thing that is really difficult and challenging to appropriately handle or to do the adjustment on. And I think that anytime you bring the third parties in to actually write their policies, put their company's name on them, they really want to do it correctly. And I think it's an excellent program in terms of keeping it simple and easy to do and to bring more people into the process. But I'd like to ask Mr. Ellis, if Mr. Ellis, do you see the Write Your Own as a feasible long-term alternative, or at least a part of the National Flood Program in the future?
Certainly, Senator Rounds, thank you for the question. I do see that it will be a part of it. It is an element to expand it. But I also think the alternative of private insurance is something that should be promoted and developed. And certainly because one of the issues that you bring up is that if you have a problem with the Write Your Own coverage, you got to go to FEMA to argue about this. If you have a private insurer, you go to your state insurance commissioner, which is a lot closer to the consumer and has a lot more skin in the game as far as regulating that exact insurer. And that insurer wants to behave for this insurance commissioner.
Thank you. And Mr. Chairman, thank you for the time. I know I'm over a little bit. I would just make the comment. I think part of the long-term plan on this should be to allow that state insurance commissioner, because I agree totally with Mr. Ellis. I think that state insurance commissioner, if they had some oversight over the national flood insurance plan, I think we might find a lot of these problems being handled. And so but thank you, Mr. Chairman. I am over my time.
Tester showed up. Thank you, Senator Rounds. Senator Menendez from New Jersey is recognized for 5 minutes.
Thank you, Mr. Chairman. I think everyone on the committee can agree that we need to put an end to the short-term reauthorization extensions, I should say, of the NFIP, and finally pass a long-term reauthorization of the program. And in my mind, any NFIP authorization bill needs to keep premiums affordable, invest in robust mitigation, and fix the claims process that left so many New Jerseyans, for example, out of their homes for years after Hurricane Sandy. And I also think we need to deal with the NFIP debt so that we can put the program on sound financial footing and reinvest those savings into building resiliently so that communities are prepared for the climate challenges of the 21st century. Last Congress, I introduced a bipartisan NFIP REACT that answers these challenges. I certainly appreciate Senators Cassidy, Schumer, Kennedy, and other co-sponsors on the committee who came together to advance bold and necessary reforms, and I'm hopeful that we can come together. I know Senator Rounds has expressed interest on working on this. I look forward to working with him and others to get a long-term reauthorization done. But unfortunately, what I've heard from some of the witnesses today concerns me and runs counterintuitive to the whole purpose of the NFIP. The great solution, as some say, to the problems is to raise premiums. That makes the most vulnerable to flooding pay extremely high premiums for their coverage. The reality is the more you put onto the back of the policyholder, the more people leave the program altogether. Ultimately, this idea is worse off for taxpayers, forcing Congress to spend more on expensive disaster relief that goes to unprotected homes. So I think we know that there are two sides to a budget. You either increase revenues or you cut costs. So why would we penalize policyholders when there are runaway expenses of the NFIP? I mean, 30 cents every premium dollar written goes straight to the pockets of insurance companies. The federal government pays itself $400 million every year in interest payments. FEMA even covers insurance companies' high-priced lawyers that rack up endless legal bills to challenge, I think very often, from my experience in Sandy, unfairly policyholders. So, Ms. Sternhurl, wouldn't you agree that we should get the costs of the program under control, like cutting WIL compensation instead of jacking up premiums that push people out?
That's a good question, Senator. And as I laid out in some of my testimony, yes, write your own compensation is something we are concerned about given the financial situation of the NFIP. Obviously, we want people to be paid fairly for work done. And so one of the things we have put forward is, perhaps the year one that you issue a policy, a WIO can receive 30% of the premium cost. But when you're basically forwarding a DocuSign for a renewal, that's not the same degree of work. And at that point, there's an opportunity for the NFIP to recoup more of that premium back to them.
Well, I think one of the long-term reauthorization goals has to be keeping premiums affordable. Now, FEMA has been working for the last few years on a new rating system called Risk Rating 2.0. However, to date, there is still very little known about the new rating system, how much premiums will increase, where the impacts will be concentrated, how about they went about their rating. And it's not just a New Jersey problem. This rating system will impact colleagues on the Gulf Coast and southeastern coastal states, among others. Under the existing rate cap, homeowners can see their premiums double in just 4 short years. This is why I've called for a 9% rate cap to protect policyholders from a sudden increase. Let me ask you again, Ms. Sternhell, can you talk about why it's important for flood insurance premiums to remain affordable?
At the end of the day, we want people covered. We want them to be able to rebound after an event. And so ensuring affordability means people will take up coverage, and it means that homeowners who maybe aren't required to have insurance coverage will adopt policies, will subscribe. It broadens the pool of risk. It lowers rates for everyone. It lowers the risk to the program overall. That's some of our concern about Risk Rating 2.0, that it's been done a bit in a black box. And we don't know what the impacts will be, whether they're localized, whether they're widespread in specific communities. And so ensuring affordability, I think, is the #1 challenge facing you all right now as you reauthorize this program.
Okay, and finally, for every dollar spent on mitigation, the federal government saves $6 on the back end. Mr. Burgenis, can you talk about why mitigation is a critical part to reforming NFIP?
Absolutely. Usually the buildings that need mitigated tend to be our older buildings. They tend to also be lower cost buildings and housing folks that are more modest means and those that are most vulnerable. So mitigation becomes very important, because then whether you elevate, whether you relocate, whether you buy out and do those kinds of things, you truly can make those families and those businesses much more resilient to flooding in the future and have the benefit of a lower flood insurance rate,
as well as stopping the likelihood of repetitive loss.
Exactly.
Thank you, Mr. Chairman. Appreciate your hearing on this.
Sure, thank you. Senator Tillis from North Carolina is recognized for 5 minutes.
Thank you, Mr. Chairman. Just following up on Senator Menendez's comment, I think that we've seen far too many instances down in North Carolina when a homeowner is willing to accept a buyout, having no choice but to rebuild, only to be in the same position a year or two down the road. So I think quick resolution is something that we should focus on. Mr. Ellis and Mr. Lehman, if you look at a map of the East Coast of the United States, you know that North Carolina juts out there and is prone to hurricanes that can hit the Outer Banks or go down south to Emerald Isle. And we know too many hurricanes, even in my tenure as senator. The one question that I have, and I want to get to Risk Rating 2.0, and maybe you can just answer it. Do you think the Risk Rating 2.0 has that they're comprehensive in nature? One of the things I'm particularly concerned with in North Carolina, we all see the storm surge, And a lot of people may think it's over, but anybody that lives in North Carolina knows that about 2 or 3 days later, that's when we're going to get some of the worst flooding as the river basins drain out to the coast. So are the risk rating 2.0 considerations comprehensive? Do they take that into account, or do we need to do more on that moving forward? And that's for Mr. Ellis and Mr. Lehman.
Thank you, Senator Tillis. So certainly, and also in North Carolina, a lot of the concentrations on the looking at the coast, but you have huge instances of riverine flooding and where storms have just parked themselves over there and repetitive losses in places like Lumberton or Princeville. So this is certainly a big issue. And yes, I do believe that risk rating 2.0, and it is something that is iterative and we're learning more about. I will point out that FEMA points out that almost 25% of the properties are going to see less premium under risk rating 2.0. But it is intended to be more forward-looking, to be more to be more extensive than what we currently have. And certainly, your state of North Carolina, has been a leader in mapping and putting this information out there and making it publicly available for either future casting or even looking at real time with storms. And so I really salute the state of North Carolina and their efforts.
Right, I agree. North Carolina was an innovator in using LIDAR, which provides accurate three-dimensional picture of water flow, drainage, et cetera. And that is the direction that risk rating 2.0 takes. Risk is much more granular than the old school paper maps ever showed, and moving in a direction that looks at property level risk, which also can take account mitigation at the property level, is really important.
Yeah, I'm glad to hear you say that. I was going to brag on North Carolina, but that was something that I worked on as Speaker of the House to make sure that we could see that the lack of information was causing what I thought were unreasonable outcomes and risk assessment. So I'm glad that you all recognize that investment that we've made has paid off. Could you go back and briefly, I think it's very important because I think a lot of people think that this is an across-the-board increase in flood insurance. Could either one or both of you maybe add to what the other one says? Mr. Lehman, we'll go with you first. Can you briefly summarize how these rates are going to be spread out across the insurer base? It's my understanding that about 45% may experience a significant increase. Some will have a decrease, and some in the middle will have a moderate increase. Can you give me a little bit more flesh on the bones?
Sure, and I believe Steve has those specific figures in his testimony, so I might defer to him.
Okay, yeah. Mr. Ellis.
Yeah.
Yes, thank you, Senator Tillis. So yes, you're absolutely right. According to FEMA, that 4% will see an increase of more than 20% a month, but those are for high-value homes in high-risk areas. But 23% will see an average decrease of $86 a month, and 66% will see an increase of less than $10 a month, and another 7% an increase of less than $20 a month. And I'll also add that we're still talking about affordability issues as well. So it's not just, we still should have means tested assistance outside the rate structure. If people can't afford those premium changes, well, then we should certainly do it. Even if their premiums decrease, they may not be able to afford their premiums, and we should have means tested assistance in the appropriate areas.
Absolutely.
Thank you all very much. Thank you, Mr. Chair.
Thank you, Senator Tillis. The next two senators, and I may have to step out to do Finance Committee real quickly, is Senator Warren, and then I believe Senator Kennedy, and perhaps after the two of them is Senator Van Allen, but I don't know for sure. But Senator Warren, you're recognized for 5 minutes from Massachusetts.
Okay, thank you, Mr. Chairman. So floods are our country's most costly natural disasters. Climate change is worsening this crisis. Sea levels are rising, severe storms are becoming more frequent, and as a result, our floodplains are spreading and putting more people at risk every year. By 2050, 1 in every 10 properties in Massachusetts is projected to face a substantial risk of flooding. In Boston, it's even higher at 30%. And in communities like Hull, Massachusetts, more than 2/3 of properties will be at risk. Now, the National Flood Insurance Program, NFIP, is designed to help homeowners in at-risk areas rebuild after a flood, but that is really only part of the picture. It's also a tool to prevent and mitigate the damage to our communities before the flood hits, including making sure that we have the right infrastructure to protect property from rising water levels. Ms. Smith, study after study tells us that it pays to prepare. For every dollar the government invests in disaster mitigation, we get about $6 in return on that investment. So let me just ask you, are we spending enough on efforts to lower the long-term risk of loss from floods?
Senator, thank you for that important question. And the answer is no, not by a long shot. We've been stingy in pre-disaster planning and investment, and that ends up costing us in damages, not just to property, but in lives and livelihoods. And NIBS, the folks who give you the 6-to-1 number, they have recently said that our nation's disaster investment gap now exceeds $520 billion.
Wow.
And now that's all disasters, but flood is a big chunk of that.
Yeah.
So we need better building and we need more investment. You know, communities in your state are trying to help people elevate. We need projects like, for example, the Charles River project that the Army Corps did years and years ago, preserving thousands of acres of wetlands has paid benefits in reduced damages.
Right. That is very helpful. Thank you. You know, a recent study found that only about 1% of properties insured by the NFIP suffered repeated losses. And yet these properties account for more than 30% of claim payments. So we have to find ways to make these properties and the floodplains and coastlines where these homes are located more resilient, or the NFIP will never be sustainable. So beyond restoring and protecting our natural infrastructure, we can also protect against flood losses by investing in our physical infrastructure, like strengthening building codes, elevating buildings, as you mentioned, moving costly HVAC units to higher floors. Mr. Burgenis, do you agree that if the NFIP is ever going to be self-sustaining, the federal government's going to have to dramatically increase funding for physical infrastructure, such as water resource projects and robust funding of the Army Corps of Engineers that helps build this infrastructure?
Yes, Senator Warren, absolutely. And it really, when you look at our national flood mitigation approach and the investments in infrastructure, I think multiple agencies have pieces of this, right? The Corps of Engineers tends to do the larger flood control projects, and they definitely have a role. As the panel, as many folks have said, the situation, especially on the coast, is only going to get worse. But then FEMA has a role too in terms of investing, especially in particular, more building by building and smaller mitigation projects, and even agencies like the Department of Agriculture through conservation programs and things, they have a role too. So I think when we do all of those together, we need to triple down on our investment in terms of infrastructure and resiliency.
That is very helpful. Thank you. Climate change is the biggest threat to NFIP programs and to the families that rely on this program to insure their homes. So we have to remember that NFIP is just one of the tools the government has to protect communities from the immediate and catastrophic impact of climate change. A big piece of this is addressing climate change head on, and that means ending our dependency on fossil fuels and investing in renewable energy and coastal restoration, in natural resiliency. And until we get serious about tackling climate change, we're going to be treating NFIP as a bottomless bucket that we can never refill fast enough. Now is the time to act. So thank you all very much for being here. Thank you, Mr. Chairman. In the absence of the chairman, I think Senator Kennedy is up next.
Thank you. Thank you, Senator. Can you hear me okay? Can you hear me okay?
Yes.
I want to thank the chairman and the ranking member for calling this hearing. I'm curious why FEMA isn't here, particularly Mr. Morstad, who is in charge of Risk Rating 2.0. But I'm sure my friends at FEMA are listening, so let me direct this next comment to them. Have you lost your frigging minds? This is this meaning Risk Rating 2.0 is the most massive change to the NFIP since we created it in 1968. Why are you trying to ram it down everyone's throat, including but not limited to the people who are going to be affected by this change? We have 5 million policyholders. 3.8 million are going to see their rates go up, at least. They have no idea why. Now, I get that there is a spreadsheet, an arithmetic side to this problem, but there's also a human side. A lot of the people, most of the people that your Risk Rating 2.0 is going to impact are not wealthy homeowners with a second or third home on the beach. That's certainly not the case in Louisiana. Most of the people, FEMA, that you're going to impact get up every day, go to work, obey the law, pay their taxes, try to do the right thing by their kids, and try to save for retirement. And their biggest financial asset is their home. And in 5 months' time, without even a public notice and comment opportunity, you're going to ram through changes that potentially could make their home unaffordable and affect its value and make it impossible to sell. Have you lost your frigging minds? I'm very disappointed with the way this whole process has been handled. People don't understand Risk Rating 2.0, and FEMA has done virtually nothing to help them understand. Ms. Sternhell, what's been your experience? Do you understand Risk Rating 2.0?
Senator, you put it immaculately. I could not agree more. The city is gravely concerned because we have no idea where this is going to land, what communities it's going to target. They have not made public the algorithm by which they are going to calculate many of these rates. Appendix E is not available online yet, according to their report. They put out that it's only monthly increases of $10 or $20. Well, you know what? Most people pay at once, and most people can't afford a $400 emergency. How are they going to afford another, $250 in insurance premiums a year? We don't know where this is going to land. There's been no consultation with local government. There's been no consultation with us who are dealing directly with constituents. And yes, we are very, very concerned.
Well, I am too, Ms. Sternhell. I'm very concerned. And you can, given the lack of transparency, which is breathtaking, and the speed with which the new FEMA is trying to move this and ram it down everybody's throats, you can pretty this up all you want to, but it just looks to me like a massive rating increase that they don't want to explain to the policyholder. I mean, what's the point of the flood insurance program? The whole point is to strike a balance between solvency and affordability. But what good is it to have a program if nobody can afford it, for God's sakes? In your opinion, Ms. Sternhell, you may not know the answer to this, but we've got 2,000 levies in my state, many of which have been paid for not by the federal government, but by Louisianians through their taxes. Have the folks at FEMA taken into consideration the levies?
I think that is a factor, though we have not seen it explained in plain English. We've not been consulted. We've not had it walked through. I got the very helpful infographic on the New York State profile that said 93% of ratepayers or subscribers in New York will see their rates either go up or down.
Well, I'm out of time.
What do I do with that?
I'm out of time, but to my friends at FEMA, hello. I realize that today we can't find you with Google, but you need to come before the United States Congress and explain what you're doing here. And you need to come before the policyholders and explain what you're doing here. And you need to come before all of us and explain that you actually understand what you're doing here, because I don't think you do. Thank you, whoever's chairing this thing.
Well,
Hello?
this is, I think, Senator Kennedy, this is Chris Van Hollen. I think I'm going to ask my questions now. I don't know who I'm supposed to hand it over to, but let me thank all of our witnesses for being here today. Thank you for your testimony. I think we're seeing in this debate the increased costs that families are experiencing every day from climate change, from rising sea levels, from other impacts of climate change. And we've got to have a strategy as a country. That strategy has to include two parts. One part is addressing climate change head on. And President Biden has put forward a plan as part of the American Jobs Plan to address those issues, to dramatically reduce our reliance on fossil fuels, move toward a clean energy future. And if we don't do that, the costs will go up and up to taxpayers, to ratepayers, and to everybody else. The other thing is to work through adaptation and mitigation. And obviously, the flood insurance program is part of trying to support families in homes that are particularly hard hit during these times. I would like to just step back, broaden the lens a little bit, and talk about federal government investments, whether they're in roads, bridges, transit, buildings, shipyards, other sort of things, and recognize that in order to save taxpayers money in the future, we have to build now and going forward in a way that incorporates resilience. Otherwise, we're going to invest money in, say a highway and a floodplain right now, and if it's not built in a way that can withstand the impact of climate change, it's going to be a real loss to taxpayers. And so better investment up front in hardening these things rather than paying more in the end. Obviously, with the Colonial Pipeline, we're already seeing the negative impacts of not hardening our cyber infrastructure against attacks. We need to be doing the same thing with our other physical infrastructure in the area of transportation and other things. And so in that regard, the Obama administration put forward a federal flood risk management standard. The GAO, independent entity, looked at it and concluded that standard could help with mitigating the harmful impact on future federal infrastructure investments. Unfortunately, the last administration, the Trump administration, eliminated that standard. So Senator Brian Schatz and Senator Booker and I are reintroducing our legislation to establish in law what that Biden-era standard did through regulation. I've also questioned the Biden administration about it, and I hope that they will move forward in reinstating that important standard to adapt and to save taxpayer money dollars. I do want to ask Ms. Smith just to comment on this. Shouldn't we, as a government, be making investments with taxpayer dollars in a way that foresees these risks and costs if we don't build in a resilient manner?
Yes, thank you for the question, Senator, and thank you for being an advocate on this important issue. It's just common sense. Anyone who's making a big investment needs to look at how long that's going to last and how long you want it to last, the design life. If you look only at the flood map that tells you what the flood was yesterday and try to build to protect against yesterday's flood, you over and over again potentially can be hit by damage and disaster. We waste federal tax money. We, as someone else pointed out on the panel, you put infrastructure in risky areas, houses follow. So we definitely need that federal risk standard back in place.
Well, I appreciate that. I mean, I realized the previous administration was essentially a climate change deniers, including the President of the United States. But all of us have an interest in protecting American taxpayer investments. And, for the life of me, I'm not sure why they eliminated a provision which GAO has indicated would help prepare and would save taxpayer dollars. So we need to press forward with this. Thank you for your input on this. And now I'm going to be turning this over to Senator Kramer for questions.
Yeah, thanks a lot. And thanks to all of the witnesses. I just really have one question, and maybe I don't care what order necessarily going, maybe start with Ms. Kagan, but one of the most common concerns that I hear from homeowners and the other stakeholders on this issue of NFIP reauthorization is really the need to ensure that there's not a penalty for a homeowner transferring between the government programs or NFIP programs and private flood insurance. And I'm just wondering if you could first of all give a basic opinion, but a rationale for that.
The city's view is that everybody should have coverage, whether it's coming from the NFIP or the private sector. So we would certainly encourage everyone to maintain coverage, whether you're switching to the public program or you're going to private insurance, because at the end of the day, we want people protected.
Sure.
Yes.
Go ahead. I'm sorry. Go ahead.
Senator, so a lot of the implementation of Biggert Waters allowing private flood to satisfy the mandatory purchase requirement has been accomplished in the last few years by lending regulators, but this is one area that Congress could still provide clarity that if you leave the NFIP, go to a private insurer, and then want to return to the NFIP later, maybe the private insurer you went to leaves the market, maybe they raise rates significantly, that you could still get the rate you would have gotten as if you had not left in the first place. And I think that that's a valuable thing that Congress could provide as clarity. It also would help the private market. It would help both the private market and the NFIP, because the private market needs to attract people. And that is a concern people would have about buying private flood is it a one-way street and I can't go back?
Mm-hmm. Sure. Others, Mr. Ellis, or?
Yes, thank you very much, Senator Kramer. No, absolutely. Not surprisingly, I agree with Mr. Lehman, but that, yes, you want to have that portability. I mean, the only reason why somebody would leave the NFIP is that they have a better product or better price or both. But you want to make sure that then there's confidence that, okay, I'm sticking my toe into the water. I want to make sure that if I do want to go back to the NFIP, it's available. And so I think that will actually foster more people getting coverage, which is really what the whole goal should be, is that more Americans get flood insurance coverage. As I pointed out in my testimony, only 5 million policies. We have well over 100 million housing units. We've heard repeatedly about flooding that occurs outside of the mandatory purchase areas. And so this is an area where we want to see more people get coverage. And the way you're going to do that is if the people are starting to buy their insurance from a Gecko, a Geico, or they're buying it from Mayhem, or they're buying it from Flow.
Sure.
Yes, Senator, if I could
Please.
that the continuous coverage provision is one we know that there's a desire to do, but one of the things I think that we elaborate on in our testimony is we need to, based on the principle of fairness between the NFIP and private insurers, and there's in the changes in 2012 and 2014, there are a couple of additional changes that are needed to make sure the NFIP is actually on a level playing field with private. For example, we've long proposed this concept of an equivalency fee that's equal to the national policy fee to help pay for floodplain management and mapping. The mapping, even for private policies, delineates where you have to buy flood insurance. It inherently is helpful to private industry. Also, we need to make sure that communities aren't dropping out of the program because they know private flood is available. And then finally, we need to address the discretionary acceptance loophole, I guess is what I'll call it, a rule that the regulators passed in 2019 that quite honestly runs totally contradictory to what Congress directed in terms of private policies. Thank you.
Yep, well said. Thank you. If that's it, that's good with me, Mr. Chairman.
Okay, thank you, Senator Kramer. I believe Senator Smith is asking a question in another committee right now, so we will go to Senator Warnock for 5 minutes. Senator from Georgia.
Thank you so very much, Mr. Chairman. As a native of Savannah, Georgia, the city by the sea, this issue of flooding is deeply personal for me and for folks I know, including, my own family, my own hometown. An analysis from the Union of Concerned Scientists noted that the Savannah area experiences some level of flooding approximately 10 times a year. Just 40 years ago, that was 5 times a year. By 2030, they're predicting 30 coastal flooding events per year and 100 flooding events by 2045. I'm extremely concerned about the impact of these flooding events, particularly on low-income communities and their vulnerability to climate change. This issue is particularly timely for Georgia's coastal communities. We all kind of shaking our boots this time of year, the closer we get to the hurricane season. Mr. Burgenis, how will increased flooding events driven by climate change affect coastal communities like Savannah? Particularly, how will a greater frequency of these events affect low-income communities near the coast?
Well, Senator, thank you for the question. And of course, when we think of low-income communities, we immediately understand that that is the segment of the population that is the least resilient to flooding. And so, where we may have had a big flood that would affect folks occasionally, by having more repetitive flooding for folks low income, it will significantly degrade, I think, their quality of life, especially if we don't help support through mitigation and also through things like affordability programs for flood insurance, mean tested affordability. So we need to bring to bear all the resources, the mitigation resources, affordability assistance, and also build capacity so that they can mitigate and enjoy the same benefits of the NFIP that others do.
Right. So around this issue of both vulnerability and affordability, as you know, a 2018 FEMA report found that the majority of homeowners who live in high-risk flood zones without flood insurance, were, not surprisingly, were low income and may be deterred from buying coverage due to expensive flood insurance prices. I understand the many considerations that led to FEMA's decision to enact a new pricing risk model for flood insurance, but I'm concerned that this new pricing model will affect low-income communities in flood zones, those that have the least amount of resources. Mr. Sternhill and Ms. Smith, Congress has been grappling with flood insurance affordability for many years, and this new pricing structure is intended to contain the federal cost of flood insurance. But do we risk unintentionally exacerbating the racial and socioeconomic disparities that already exist?
Yes, Senator, I think we do. And part of the difficulty with this, as you heard from Senator Kennedy previously, is we don't know exactly where this new risk rating program will land and whether it will be concentrated predominantly in communities that are low income or majority minority or those that have been most disadvantaged. And that's one of the things that's most concerning. Even apart from this revised rate structure, the affordability challenge would be the same. The rates are going to continue to go up, but for the statutory limits on annual rate increases, people would see their rates going up even further. And we know with climate change and with new maps coming in, that affordability concern is going to be exacerbated. And so we need to find a good model that looks at how we can do affordability directly for that homeowner, and at the same time bring to bear the resources of the federal government and local government to mitigate more broadly. Because we can't just do it home by home. We need to do a community level, and we need to pull together as a nation and communities to actually ensure we can protect these residents, keep them in their home, and or get them somewhere safer and ensure they maintain their assets.
So go ahead. Yes, Ms. Sternhill.
Yes, Senator, this is Ms. Smith, and I would say that we can do both of these things, and that actually risk rating 2.0 in some respects helps those people who are least able, who have policies now and have been paying too much for the higher, in order to cross-subsidize the higher priced homes. But I think we can then do an affordability program on top of that that addresses both rate and assistance for mitigation. And I think if we allow the FEMA to look at social vulnerability as one of the factors in giving grants, this will help solve the problem.
So, in as much as most folks have a majority of their wealth in their home, this obviously has implications for the racial wealth gap, and underscores the need for public policy that ensures that everybody who needs or wants flood insurance can get it. And it seems to me that we have an obligation at Congress to make sure that that's the case. Thank you so much.
Thank you, Senator Warnock. Senator Daines from Montana is recognized for 5 minutes, and Senator Smith is next.
Thanks, Chairman Brown, and thanks for witnesses for being here today. When we talk about floods, they're a fact of life in Montana, and it's what makes flood insurance a big deal for our state. We have leading companies that provide hundreds of jobs and thousands of national flood insurance programs policy holders. It's the reason I'm encouraged by the upcoming rollout of FEMA's Risk Rating 2.0 pricing methodology. As I chat with Montanans who work in and around flood insurance industry and to those who hold policies, it seems like the Risk Rating 2.0 enjoys broad support and will increase fairness in the NFIP. However, I have heard from some of the companies back in Montana, they want to make sure they have enough time in between the finalization of Risk Rating 2.0 to understand how it works and the impacts before it actually goes live. Mr. Ellis, do you think FEMA should consider allowing a bit of time for private industry to understand the impacts of Risk Rating 2.0 before it's rolled out? To be clear, I'd like to see this implemented swiftly, but the government unfortunately does not have the best record when it comes to the rollout of new programs. Mr. Ellis, your thoughts?
Well, Senator Daines, that might be an understatement about FEMA not doing very well at the rollout of programs. Certainly, we've seen that time and again. I can understand some of Senator Kennedy's frustration that he brought up earlier about not knowing all the details. I do know that FEMA is going to be coming and presenting before Congress, but I definitely think that, yes, if there needs to be a pause to make sure that there is greater comfort, then I think it makes sense. The reality, though, I will say is somebody will have an axe to grind. I mean, we know that. I mean, Ms. Sternhill talked about the delay in maps and stuff like that. Some of that is because communities have, I can't speak directly for New York City, but some of it is communities have opposed the maps, installed them for decades. And so that's part of the reason. I can certainly see that happening with Risk Rating 2.0. And so it's just going to be a balancing act, but certainly there needs to be less of a black box and more confidence in what the information is, Senator Daines.
Mr. Lehman, do you have anything to add to that?
Yeah, you're not doing anyone a favor by hiding from them what their real risk is. I support, Ms. Smith's proposal for a flood history at every real estate transaction, but you should also have on your policy, whether you're a grandfathered policy or a subsidized policy, or if you create a new affordability metric, you should know what the full risk-based cost of your insurance is. If you're getting a discount, you should know how much that discount is. This isn't just about saving money for the government. We want people to understand their flood risk so that we have fewer helicopters pulling people off of roofs.
Thank you. According to FEMA's analysis, about 37% of policyholders will immediately see their premiums decrease under Risk Rating 2.0. About 58% of Montana policyholders will see an increase of somewhere of $0 to $10. However, even that second group of policyholders is likely to be better off than they are now, as the current structure of the NFIP raises the premiums every year of all policyholders. Mr. Ellis, do you think the current structure of the NFIP is fair? And beyond risk rating 2.0, what can we do to help improve the NFIP?
Sure, Senator James. Well, so right now, we, as documented in this hearing, there are enormous cross subsidies, particularly from rural counties to coastal counties, and from less affluent to more affluent. And certainly the more affluent get the bulk of the subsidies. And so certainly there are issues there. Also, the way the rate structure is, it's supposed to try to pay for itself every year. And so it counts in catastrophic loss years, and it counts in every historical loss year to try to calculate these premiums. And so it does end up penalizing some groups. And also it does the insurance in broad swaths and zones, when in reality, a homeowner may have a different risk profile than their neighbor, and certainly than the next subdivision, yet they're all kind of washed together in these very broad categories that don't target the funding or don't target the rates.
Thanks, Mr. Ellis. Mr. Lehman, do you believe the NFIP could help protect taxpayers through using additional reinsurance to help transfer more risk to the private sector?
To date, the reinsurance program that the NFIP has enacted has worked out pretty well. And in 2017 in particular, we recovered in full. Like anything else, the NFIP should approach reinsurance as a consumer. There will be changes in pricing and reinsurance. Sometimes it will be more affordable and a better bet for you, and sometimes less. But that as a risk management tool is a great thing to have in the quiver going forward.
Thanks, Mr. Lehman. Chairman Brown, thank you.
Thank you, Senator Daines. Senator Smith of Minnesota is recognized for 5 minutes.
Thank you, Chair Brown and Ranking Member Toomey, and thanks to all of our panelists. I have a question. I'll ask for your forbearance because I've been in between committee hearings today if I've asking you to answer it again, but it's really important in Minnesota. This is a question about how we can encourage more communities to sign up for NFIP. And it's really important in Minnesota because, as it turns out, Minnesota has one of the lowest participation rates in flood insurance. Only about 0.4% of eligible properties receive coverage under NFIP, and only 7.6% of Minnesota structures in high-risk floodplains carry flood insurance. And this is occurring even though Minnesota is a relatively high flood risk state. And of course, due to climate change and more extreme weather events, that number is only getting worse, not better. So my question is this: as we face these big challenges with large rain events, these sort of so-called pluvial flooding that is going to be included, as I understand it, in the new risk rating 2.0 system, how do we balance this out? We need to dramatically expand the number of households covered by NFIP. We also need to make sure we know that premiums aren't sufficient to cover the increasing cost of coverage, and we've got this rising debt challenge. So my question to all panelists, and I'll start with Ms. Smith and Mr. Burgenis, how do we balance out these values, encourage participation, and also address this affordability challenge?
Senator, it's an important question. I mean, that's the fundamental question before the committee is how do you weave all these pieces together? So I think we have to really up the game on mitigation assistance. I think the other thing to do is, as Mr. Burgenis mentioned, help communities that are under-resourced. In my own state of Virginia, there are many, many communities that don't have certified floodplain managers. So if we can help those small, under-resourced communities find technical assistance from FEMA, work as partners with FEMA, get funding from FEMA, and allow them to work with neighboring communities, with the Silver Jackets Army Corps program and other programs to help them build up their capacity in this area. And then we can have more participation in the NFIP.
Thank you. Mr. Burgenis, would you like to respond to anybody else?
Sure. One of the issues in Minnesota, having known for most of my career the state floodplain manager there, is that in a way you're a victim of your own success. Minnesota has been effectively managing flood risk for decades. And I almost think that from the standpoint of when it floods and not a lot of people are affected, that has a psychological impact of saying, well, geez, we don't have to do something about it. Nonetheless, as Ms. Smith said, this is an age-old problem of the NFIP, penetration rate. How do we increase that? FEMA has a role to play in that, but honestly, so do states and communities. And so I like Ms. Smith's idea of building state and local capacity to help communicate the risk and help encourage folks. And again, one of the ideas we have is significantly expanding the community assistance program.
Thank you. Would anybody else like to respond?
If I may, I mean, one of the things we confront within New York City is that there's a number of properties outside the special flood hazard area or zone X. We can get a preferred risk policy. Now, what happens with this with regard to risk rating 2.0, setting that aside for the moment, if people are buying those policies, we want them to, right? Because they're lower flood risk and they get a preferred rate, but there's still no mitigation options available to them to lower that rate further. And so encouraging that mitigation and pushing FEMA to find alternatives so we can say, hey, here's a really low cost policy. You can do this mitigation, it'll go down even more. We can bring more people into the program so that they are covered in the outside event there is a flooding event for them.
Thank you.
Senator Smith, if I may, just really briefly, I know you don't have much time, but there is the sort of the tyranny of the 100-year floodplain. And that is people think they're either in the floodplain or they're out of the floodplain, when in reality, we're all in some sort of floodplain. And so there is an issue of where people think if they don't have to buy it, then they don't buy it. And so some of it is risk communication that we talked about. Some of it is getting the private sector involved, more people selling flood insurance, more familiar people selling flood insurance so that people can bundle their policies with their car and their other homeowners.
This might have been
There's a whole variety of tools and tactics that I think that can be done in that way. And the other thing is, and this was brought up when I testified at House Financial Services, we need to have like a cross-cut of the federal budget of all the disaster spending and mitigation programs so we can really better target that. And then that also will help hopefully promote better flood resilience, but also better take-up of the flood insurance program.
Thank you very much. I think my time is up. Thank you, Mr. Chair.
Thank you, Senator Smith. Thank you all. This was, I just thought the ideas sweeping across this panel where no real partisanship, not even much ideology, just how are we going to solve this? So I just thought all five of you were really, really helpful. It's demonstrated the importance and the complexity of NFIP, its interrelated activities of ensuring and preventing flood damages. There's questions affect the things people care about most, their homes, their businesses, their communities, their future. Congress has struggled, as Senator Toomey said, to settle these complex questions through reauthorization. I'm encouraged. We've heard a lot of agreement across the panel, particularly around the areas of investments in mapping and mitigation. We need to get serious about that and concern for people who struggle to afford the protection they need. So I will continue working with Senator Toomey and others in this committee. The question